Today, investing in the stock market is growing by the day and becoming more and more popular. There are so many people who are searching for a long term business in this economy. In the event that you are one of those who want to get involved in the stock market, this is the perfect opportunity. If you want to enter into the stock market and become successful here, you have to be extremely careful about your moves and the investments that you make. This is why here we are sharing top 40 stock market tips for beginners in 2019. So watch this full video carefully if you are beginner in stock market. Number 1. Find out the company's market capitalization. Doing this will help you to figure out how volatile the stock will be, how broad the company's ownership is, and the potential size of company's markets. Also find out what exchanges the stock trades on. Number 2. Who is running the company? Look at the bios of company management. Who are they and what kind of experience do they have? Also see if the company managers hold a large amount of company shares. High share ownership by manager is a good sign. Number 3. Never go into the trade without the proper information. Jumping the gun too quickly can mean a lot of losses to your finances. This is actually one of the most common mistakes among new investors. Number 4. Consider useful software to help you with a variety of tasks. It is recommended to invest in personal finance software which can help you to manage your money as well as track gains and losses. Number 5. New investor can train themselves to do is throughout research the companies in which they are interested in investing and spend time watching stocks performance on the chart before plopping their money on the table. Number 6. Look up the revenue and income figures for the past 3 years. Look for trends in these figures such as whether growth is choppy or inconsistent or if there are any major swings. Also review the margins to see if they are rising, falling or remaining steady. Number 7. Look up the company's balance sheet. What is the overall level of assets and liabilities? Check to see how much cash the company has as well as how many outstanding debts are held. Number 8. Get yourself an excellent mentor to teach you as much about the stock exchange as possible. Stock trading information can be very overwhelming to someone who is new to the market. This means you need someone to put the trading strategies and information into easy to understand terms for you and make sure you stay consistent. Number 9. One of the best investing tips, especially for beginners, is to keep practicing until you have firm grasp of the market and its concepts. If you do not follow any other stock market tip, this one should definitely be a priority no matter what. Number 10. If you have absolutely no experience with economics or the market but are determined to remain in control of your own investing destiny, one of the best stock market tips you can follow is to enroll in the class that will teach you the investing basics. Number 11. Fundamental analysis mainly involves looking at revenue, expenses, assets and liabilities of a company. This is done to get an insight of the company's future performance. Number 12. This is money market, and if you do not know how this works and how your money will get processed, then you should not put money into this market in the first place. Number 13. What industry does the company operate in and how much competition is there? Compare your company to its closest 3 competitors. Number 14. One of the most important stock market tips to take to heart is advice from one of the world's most successful investors, Warren Buffett. Mr. Buffett has been quoted many times as saying that you should only invest in what you know. This means that if you have worked in the banking industry, you should stick to currency and bank financing. Number 15. How long have all classes of shares been trading? What is the long and short term price movement? Is the stock price smooth and steady or choppy or volatile? Answering these questions will give you a good idea of what the stock will do in the future. Number 16. If you really want to make a profit, you must hold the equity for a long time, provided the current share price is about the purchase price. Number 17. The frequency of investing is just as important as how much in fact it is part of it. By investing more frequently, you will likely be investing more, which earns you more. Investing more frequently also helps against losses. Let's say you invest twice a month. You will be getting stock at low prices and higher pricing. You will be getting the average instead of just one price. Number 18. Keep your emotion in check. If you cannot control your emotion when trading, you will lose money. Some traders get in and out of trades because they are scared and opposed to when their system tells them to. This will only hurt them. Number 19. Before buying any stock, always have an exit strategy. The stock market can be rough for beginners. Always have a price you will exit at on the downside or the upside and stick to your plan. After you buy a stock, emotions such as fear and greed can kill your portfolio. Make a plan before buying and stick with it. Number 20. Nowadays, you can get some trading software to automate your stock market deals, where this will really save you time and energy. You will also be making more accurate decisions, which will assist you in making wise investment and greater returns. You can invest in some software to help keep proper records of things like subscription costs, stockbrokers, tracking and analyzing stocks, and personal money management, among others. Number 21. Don't get too involved. Take breaks. Keep yourself away from the stock markets at interval of time. Keep the stock market away from you. This will help you to control your emotions and keep a cool head about you while you trade. Number 22. Don't trade against the trend. Bottom fishing and top picking are the most dangerous ways to trade. The risk that you would face with picking tops and bottoms far outweigh the rewards. It is better to buy a stock that is heading up than to short it. Number 23. Trading is not the quick money making program. You cannot become a millionaire in a month, but you can in a long run by having little money, good knowledge, and huge patience. Number 24. Don't trade against the industry group. It is said that 50% of what a stock does is based on its industry group. If the steel industry group is going up, then stocks in that group are likely to go up too. There will be stocks in that group that go down, but it is best to stay away from this. Number 25. It is also important that you develop strict rules for working with your investment strategies. Many people start trading based on emotion and they forget all of the rules of the strategies that they have developed. Number 26. Do you think you can stop adding money because you put in a few thousand to start? Maybe you are convinced that you made the best investment of all time and you don't need to watch it. Wrong. Never stop investing. Number 27. You know the saying, learn one new thing every day. Do it seriously. Our stock market is ever changing, diversifying, and adjusting, and you need to do your homework. It takes a lot to stay on top of it all. Number 28. When starting your investment in stock market, you should formulate some goals and ways of achieving them. You should put into consideration some things like your investment per trade, time frame, your risk tolerance, and the expected returns. You should then be disciplined enough to stick to these rules, and this is what will amount to personal success over time. Number 29. There is a considerable amount of risk involved in the market. So before you jump into this business, you need to have some kind of experience. A stock simulator account is a good way to learn about the stock business. Number 30. Do not be driven by the notion that stock low in value will skyrocket very quickly. The vice versa can happen too. So consider all pros and cons. Number 31. As a beginner, you can start by first practicing using some demo software. Proceed to real market trading, where you should start small and later invest more depending on your performance. You should also understand your risk tolerance to avoid frustrations. Number 32. Take other people's advice wisely. Some people are amazingly talented when it comes to investing. Others are terrible and others are lucky. There is a difference between taking some strategy advice from a Warren Buffett book and buying stock on the words of your overzealous neighbor. Think wisely and ponder it well before you take their advice. Most of all, do your own research. Number 33. Don't ever fall in love with a stock. Everyone likes to think they have an amazing stock market tip. When it comes to a particular equity trade they have put their heart and soul into. But the truth is, most stock trades just aren't worth it. Sure, you can turn a profit, but you will almost never find a trading strategy or a single stock trade that will make you a millionaire, no matter what level of technical analysis you put to the test. Number 34. When it comes to investing in a stock market, diversification is a crucial factor. Since you basically invest in shares of different companies, the same market fluctuation is less likely to affect all your shares. Number 35. If you are investing in the stock market just to fulfill your short term goals, think again. If you are looking to make a quick buck, investing in the stock market isn't the smartest thing to do. Number 36. It is important to make sure that you are taking your stock market tips from someone that is worthy of your time and respect. Whether you enroll in an investing classes, sign up for membership in an online community of experienced investors, or work with an online brokerage tool that provides a resource for analyzing charts and trends, it is important that you have a support system for questions and uncertainties as they arise. Number 37. Never lose your common sense and never risk more than you are willing to lose. There are 1,000 different stock market gurus out there that will claim that they have the hottest stock picks and the best advice for you, and that if you listen to them, you will never fail. The truth is, however, that anytime your money is invested in the stock market, there is always a chance that it might not be there tomorrow. Number 38. If you are young and you are thinking of investing in the stock market, you are going well. As you explore more about the ups and downs of the market and more about the factors governing the markets, you start getting better. Number 39. Learn how to perform chart analysis and how to use tools such as the candlestick charts. This will help you identify where a stock may reverse its trend, allowing you to buy early or get out before things decline too far. And number 40. Becoming a successful investment is to educate yourself. Take a few classes in accounting, read as many books on investing as you can, and research online about the various aspects of the market and how you can make it work for you. Before you start investing, you will need basic knowledge. Stock market tips are not enough even you want to get started on the right foot. You need to understand the basics of stocks, the stock market, indexes, strategies, and all the terms necessary. You can find all the information on the internet or in books. There are many resources available to you. If you found this video helpful, then like and share this video to help others. Thanks for watching 40 stock market tips for beginners in 2019.